All right, welcome to the July property market update. So what's happening on the ground? What are we seeing? Well, a few different things, and it's actually counterintuitive to what's really happening in the media, and I'll explore that in a minute. But I think on the ground, the 400 to probably up to 800, maybe 900K markets around the country are moving pretty steadily still. Days on market are pretty sharp. There's low stock and there's enough buyers to keep that stock sort of moving. So like always, the ordinary properties are staying still, but the ones that are priced well are still moving on pretty quickly. On the other hand, there's the higher range, the expensive, I suppose, holiday locations. They're taking a bit of a hit at the minute and they're sitting around longer. So those properties that are maybe priced, sort of 800-900 plus into the mills, up to 2 mils and plus, they're sitting around and they can take a little bit of a haircut if they need to get rid of it quickly. And obviously the interest rates are a factor behind moving it on quicker than maybe normal with the holding costs. But yeah, those holiday locations, more of the expensive end, your Balliners and up around there and the North Coast, they're taking a little bit of a hit at the minute. Other suburbs of Melbourne and Sydney are also seeing a little bit more supply, right? So they might be priced sub 1 million, but yeah, we're seeing a little bit more of supply in those locations, and that is a majority due to investors. So the investors are saying, well, I've got multiple properties, I might be paying P&I on my owner-occupier home, I need to get rid of 1 or 2 properties, okay? So we're seeing a little bit of supply coming in those sort of areas, and they're traditionally more lower socio areas anyway. So with that becomes some instability in holding costs for a lot of owner occupiers and also tenants unable to meet the rent each week, so they're having to move out and go and find somewhere cheaper. Maybe that's into regional locations as well, okay? Just wanted to quickly talk about mortgage stress, because we're seeing these words mortgage stress in the media a lot. Traditionally what that's saying, or the government or the media, whoever it is, they're saying, right, mortgage stress is calculated if our take-home pay, our mortgage or our rent, or basically our mortgage, is over 30% of our take-home pay. So if our mortgage is higher than 30%, and they survey numerous people around the country, and it's over 30%, they're considered to be in mortgage stress. My 2 cents worth on that is that you might be able to handle 35-40% of your take-home pay if you haven't got personal loans, credit cards, car loans, all these other discretional spendings in our life. We can handle maybe 40%, right? And you might not be actually under mortgage stress, right? So that 30% is I suppose, a global figure. Don't just pin your thoughts on, if you're over 30, you're just automatically in mortgage stress. You may not be feeling the pinch if you're over that. So just understand that when we're reading some media commentary on that whole mortgage stress thing, because it can freak a lot of people out, right? But yeah, absolutely, if you're sitting at 35-40% of your take-home pay, and you've got a car loan, and you're spending money on eating out and buying new clothes and all these things, yes, we're going to be under stress and we're going to be feeling the pinch somewhere, right? The last thing I wanted to add was what's happening with interest rate rises. Now, I don't think Taylor Swift has actually done us any favours whatsoever here, because she's put on a concert in Australia. Well, she's sold tickets and they've sold out in about 2 seconds, right? And thousands of Australians have jumped on, stressing out, am I going to get tickets? Am I not, right? So there's obviously some discretionary money still sitting around for a lot of Australians if they're prepared to go to those links to try and get those tickets, right? For a rock star, fantastic she is, I love her, but that's telling all Australians that not everyone's feeling the pinch here. So what does that mean? Well, it just may mean that the RBA push rates up once more next month when they meet first week in August. So that's, again, my 2 cents worth, but that's the July market update. Hope you're well, and we will chat again soon.